Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. I wanted to give you a quick update on Marathon Oil, which was bought out today by ConocoPhillips. And while I don't have a ton of insight, I'll just, again, reference to the charts. ConocoPhillips has always been a good company. They pay a larger dividend than Marathon Oil. I believe Marathon Oil was at 2.6, which has gone down significantly as Marathon Oil prices have gone up 8% this morning. So you're getting a lower yield than that. And ConocoPhillips is 3.37. But let's just take a look at where we're at. Let's get into it. So here's Marathon Oil. Here's the big symmetrical triangle that I wrote about a few days ago, reiterated the buy as we came down near our stop level. And, there was a ton of upside here. I'm kind of sorry that this happened because I was looking for $41 or so. And today the high was 29.35, so it had a ways to go. But let's uh, let's take a closer look at this. So before I go to the shorter term chart, the one thing to realize is that now the premium has been set for what ConocoPhillips is going to pay for Marathon, which caused the increase in price in Marathon and caused a decrease in ConocoPhillips share price. So while ConocoPhillips share price looks worse off, it's just because of the dilution of the additional investment into Marathon Oil. So keep that in mind. And so let's go on to look at this on a shorter term basis. And here's what happened today. You can see as the markets come down, the overall market, you also have some weakness from the open in Marathon Oil. And as oil has gone from being up this morning to down a little bit this late morning, the share price is coming down a little bit. It's no big deal. So what I did, well, let's go on to ConocoPhillips. So ConocoPhillips, here we are, has a similar pattern, not quite as big of a symmetrical triangle, but large. And this suggests about $170 price projection, and we're at, let's call it 115. So that's about $55 higher. So, you could get close to a 40% increase if ConocoPhillips can hold here and turn things around and break out again to the upside. So, again, I don't think you're losing a lot, but also don't like when you get into a buyout like this and then your money is kind of tied to another stock, if you know what I mean. And also, you did get an 8% pop in it, and that doesn't come along often, in one day. So keep that in mind. So let's take a look at the point and figure chart on ConocoPhillips. It's coming back down towards support, which means it would be a good place to purchase. And the upside price projection based on the point and figure chart is 187, I'm sorry. So it's giving you more upside than my subjective chart. So all of that is just telling me that um, just first initial reactions is what I did was I sold half of my position this morning in Marathon Oil, and the other half right now I'm keeping as part of this consolidation, and I don't mind owning ConocoPhillips. Maybe if they say this is going to get done by the end of the year, so in the meantime, Marathon will trade in conjunction with ConocoPhillips. So I don't mind having, I want energy exposure. I don't mind having it tied to this company, but I also makes me think about consolidation in the industry and what's going to come next. And so I took half off the table on that 8%, 8 or 9% initial pop. And I'm going to be looking for other attractive smaller companies that might be takeout candidates. So I hope that gives you some color. Those are my initial thoughts. I'll have time to think about it tonight. Please like and subscribe. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Have a great day.